Welcome to this video on cryptocurrency technical analysis. In this section, we will give an overview of technical analysis and its importance in cryptocurrency investing. Technical analysis is a method of evaluating investments by analyzing statistical trends and patterns gathered from trading activity, such as price and volume data. This method of analysis is widely used in traditional financial markets and has also gained popularity in the cryptocurrency market. Technical analysis can be particularly useful in the cryptocurrency market, which is known for its volatility and fast-paced movements. By analyzing price trends and patterns, investors can potentially identify profitable buying and selling opportunities. Moving averages are used to smooth out price fluctuations and identify trends over a given period. The Relative Strength Index, RSI, is a momentum indicator used to measure the strength of buying and selling pressure in the market. Fibonacci retracements are a popular tool used to identify potential levels of support and resistance, while Bollinger Bands are used to identify overbought and oversold conditions in the market. The Moving Average Convergence Divergence, MACD, is another momentum indicator used to identify changes in trend direction. Understanding chart patterns is also an important aspect of technical analysis. Support and resistance levels are areas on a chart where prices have historically reversed. Trend lines are used to identify the direction of a trend, while chart patterns such as head and shoulders, double tops and bottoms, and triangles can be used to identify potential trend reversals. It's important to note that technical analysis has its limitations and risks. False signals can occur when indicators provide misleading information, and limited historical data can make it difficult to accurately predict future trends. Market manipulation is also a risk to consider when using technical analysis. However, by combining technical analysis with fundamental analysis, investors can gain a more complete understanding of the market and make more informed investment decisions. Fundamental analysis involves analyzing factors such as adoption rates, transaction volume, and development progress to determine the intrinsic value of a cryptocurrency. By understanding key technical indicators and chart patterns, investors can identify potential opportunities and risks in the market. It's important to always consider the limitations and risks of technical analysis and to combine it with fundamental analysis for a more complete understanding of the market. In this section, we will dive deeper into understanding buying and selling pressure in the market, the importance of analyzing volume and price action, and how the Wyckoff method can help identify market manipulation and smart money activity. Order flow analysis involves studying the actual trades that are taking place in the market, as opposed to just looking at price and volume data. By analyzing order flow, traders can gain a better understanding of the supply and demand dynamics in the market and identify potential opportunities. The Wyckoff method, developed by Richard Wyckoff in the early 20th century, is a technique for analyzing price action and volume to identify trends and potential market reversals. It is based on the principle of buying when demand is strong and selling when supply is strong. The Wyckoff method involves analyzing price and volume data to identify accumulation and distribution phases in the market. During accumulation phases, smart money investors are buying up assets, while during distribution phases, they are selling them off. By identifying these phases, traders can potentially get in on the action early and profit from market movements. One key aspect of order flow analysis and the Wyckoff method is the importance of analyzing volume. High volume during an uptrend or downtrend can confirm the trend and indicate a potential continuation, while low volume during a trend can signal weakness and potential trend reversal. However, it's important to note that order flow analysis and the Wyckoff method are not foolproof and come with their own set of risks and limitations. False signals, limited historical data, and market manipulation can all affect the accuracy of technical analysis. Therefore, it's important to combine technical analysis with fundamental analysis for a more comprehensive approach to cryptocurrency investing. By analyzing both market trends and fundamental factors such as adoption rates and development progress, traders can make more informed investment decisions. In conclusion, order flow analysis and the Wyckoff method can be powerful tools for cryptocurrency technical analysis. By analyzing buying and selling pressure in the market and studying price and volume data, traders can potentially identify trends and profit from market movements. However, it's important to understand the risks and limitations of technical analysis and to use a holistic approach that combines both technical and fundamental analysis for a more well-rounded investment strategy. In this section, we will talk about the risks and limitations of technical analysis in cryptocurrency investing. Chart patterns are one of the key components of technical analysis and can provide valuable insights into potential market trends and price movements. The first chart pattern we'll discuss is support and resistance. Support is the level at which buying pressure is strong enough to prevent the price from falling further, while resistance is the level at which selling pressure is strong enough to prevent the price from rising further. By identifying these levels on a chart, we can gain a better understanding of the market's behavior and potential price movements. Next, we have trend lines, which are used to identify the direction of a trend. An uptrend can be identified by drawing a straight line connecting a series of higher lows, while a downtrend can be identified by drawing a line connecting a series of lower highs. By identifying these trends, we can better anticipate potential price movements and adjust our investment strategies accordingly. Head and shoulders is another important chart pattern to consider. This pattern is formed when a price reaches a high point, followed by a dip, the left shoulder, a higher high, another dip, the head, and then a lower high, the right shoulder. This pattern suggests that the market is likely to experience a downward trend, as selling pressure may increase. Double tops and bottoms are similar to head and shoulders, but involve 2 high or low points rather than 3. These patterns suggest that the market may be reaching a turning point and can provide valuable information for investment decisions. Finally, we have triangles, which can be either ascending or descending. An ascending triangle is formed when the market experiences higher lows and a resistance level, while a descending triangle is formed when the market experiences lower highs and a support level. These patterns can help us identify potential breakouts and reversals in the market. Technical analysis is not a crystal ball, and it cannot predict the future of the market with certainty. It is essential to understand the risks and limitations of technical analysis before using it to make investment decisions. One of the most significant risks of technical analysis is false signals. False signals occur when a technical indicator gives a signal that does not result in a price movement in the expected direction. False signals can lead to losses if an investor acts on them. Another limitation of technical analysis is limited historical data. Cryptocurrency is a relatively new asset class, and historical data may not provide a complete picture of market trends. It is important to be cautious when using historical data to predict future market movements. Lastly, market manipulation can also pose a significant risk to technical analysis. Cryptocurrency markets are highly unregulated, and price manipulation can occur through various means such as pump and dump schemes and spoofing. It is essential to be aware of these risks and monitor for any suspicious activity in the market. To overcome these risks and limitations, it is important to use technical analysis in conjunction with other forms of analysis such as fundamental analysis. A holistic approach to cryptocurrency investing can help mitigate the risks and increase the chances of success. As we know, technical analysis involves studying charts and using various indicators to identify patterns and trends in the market. Meanwhile, fundamental analysis involves analyzing the underlying economic and financial factors of a particular asset or market. While technical analysis is important in identifying short-term trading opportunities, it's crucial to use it in conjunction with fundamental analysis for a more holistic approach to investing. By considering both technical and fundamental factors, investors can gain a more complete understanding of the market and make better informed investment decisions. For instance, while technical analysis may show a bullish trend, it's important to consider the underlying fundamentals of the cryptocurrency being traded. Is there a strong community behind the project? Are there any upcoming developments or partnerships that could affect the price? These are all important fundamental factors that can affect the success of a project and ultimately impact its price. On the other hand, fundamental analysis alone may not provide a complete picture of the market. Technical analysis can help investors identify key levels of support and resistance, as well as trend reversals, providing valuable insight for short-term trading opportunities. So, in conclusion, it's important to remember that a holistic approach to cryptocurrency investing involves combining both technical and fundamental analysis. By doing so, investors can gain a deeper understanding of the market and make more informed investment decisions. Finally, the most critical takeaway is the importance of continuous learning and adaptation in cryptocurrency technical analysis.